Thank you so much, everyone, for joining NASHONOMICS 2021. We are very excited to bring you this new virtual format for this 5-part series. Please let us know if you've got questions in the chat. We will work to facilitate those throughout our discussion today. And today we will be discussing realtor market challenges. This session is sponsored by THDA. So we would like to have a quick word from our sponsor.
Hi, I'm Josh McKinney, Real Estate Industry Advisor with Tennessee Housing Development Agency. Our mission at THDA is to meaningfully expand safe, sound, and affordable housing opportunities for all low to moderate income Tennesseans. We're in the midst of one of our most successful spans of years in our agency's history, and we owe a huge debt of gratitude to our partners and friends amongst Nashville's realtors. Your dedication and hard work and commitment to doing what's best for the client is helping our families achieve sustainable homeownership. On behalf of everyone at THDA, thank you, Nashville Realtors. Remember, if you ever need help or support, our doors are always open.
All right, everybody. Thank you for bearing with us, and thank you to THDA for sponsoring this session. It's my pleasure to introduce our speakers today for the session. We are joined by Brian Copeland, Denise Moore, Kamal Saba, and Teddy Penns. Welcome, everyone.
Thank you, Anna, for hosting us today. Thank you all for joining us today at Greater Nashville Realtors. This NASHONOMICS series is one of my favorite things we do every year. This year, when we were looking at NASHONOMICS, we said, how do we make this a bigger event for you guys? Usually it's a one-day event, but this time you're going to see a multi-day event. And when the staff members and the volunteers were coming together to say, how do we do this year? We were looking at, we got to kick off with the realtor point of view. Because we're all in the same boat together right now. And it's uncharted waters for most of us right now. So we want to start off the entire series with hearing from people just like you. So today we chose 3 practitioners who represent different parts of the market segment. We will be focusing on the Nashville market. We will talk a little bit about the outlying markets, but for now we're going to really be focusing on this Davidson County Nashville market. Kamal Saba, if you could unmute for us and tell us 10 seconds or less a little bit about yourself.
Hey guys, my name is Kamal Saba. I am an affiliate broker at Compass Real Estate. I've been practicing real estate for about 7 to about 8 years now, and you know, the market is definitely a difficult market for both buyers and sellers right now, particularly buyers. But I'm here and happy to give you guys the best insight possible. Great,
thanks, Kamal, and welcome, Denise Moore.
Thanks, Brian, for inviting me. I'm Denise Moore. I'm affiliate broker at Benchmark Midtown. I have been practicing real estate for 2.5 years, and I'm having fun this season, learning a lot, and what I like to say, pivoting a lot to stay on point.
Absolutely.
Thanks, Brian.
And Teddy, how about you, buddy?
Teddy Penns, Village Real Estate, been there almost 20 years. And yeah, I'm excited to be here. I appreciate you, Brian. And I'm excited to dig in more as we're all navigating this market. So grateful.
Thank you, Teddy. And so as you can see, we've got people who perhaps are watching today, and this is your first 2 years in the industry. Denise has come from your point of view. Then you've got folks who are kind of you're beyond your rookie era, and you're now in Kamal's area. And then we've got certainly our more veteran realtors like Ted and I just celebrated my anniversary, Teddy, last week. Isn't it crazy? 16 years. And we've got people I know in the audience today who've been doing this 20, 30, 40 years. So welcome to you guys too. We don't take for granted at all that you're spending your time with us. And it's such an honor to have you here. So let's kick it off. Denise, I'm going to come to you. And this is going to be on a scale of 1 to 10, 10 being the highest. And then I want to delve into this a little bit, but I just want to get a temperature check from the 3 of you. And I'll go Denise, Kamal, Teddy. On a scale of 1 to 10, how would you rate the buyer stress right now for place? Denise.
Well, I'm thankful that it has gone down to a 9 from a 10 recently.
Good. Kamal?
I would say it's gone down to an 8 from a 10.
Wow.
As well.
And Teddy?
would say we are at an 8.
Wow, it went down from like our last conversation. Wow. So, because last conversation we were saying, a lot higher stress. So we have seen some changes here. So Teddy, kick us off. Why have you changed from like this 10, 11 to an 8 now?
Besides my buyers deciding to just practically buy sight unseen dirt yesterday on the lake and it goes swimmingly, that helps. I'm just feeling a little bit of an ease with people. I think that we're over the hangover a little bit. People are out of the party and they almost have some awareness. It's the next day. They're shaking off the cobwebs and they're like, okay, this is speed dating, friends. Don't fall in love with these homes, right? It's really about like next, if this one doesn't work and you give it your best shot and you hire and trust an agent that can put together a great strategy for you. It works or it doesn't. You don't take it personal and you move on.
Okay. Denise, what's your take on that? Why are you at an 8 now?
Well, I was 9, but okay. I'm leaning. My buyers are 9s. I think it's more the shock. So I like that analogy, Teddy, by the way, the hangover and after the party. But I think the shock of the difference in the market is kind of wearing off. We're getting a little bit more accustomed to it. And we've talked about it and educated them. So I think it's coming down and they're wrapping their arms around, okay, this is what it looks like. And this is what I'm going to have to do. It's not what my cousin told me when they bought a house. So.
Okay. Very interesting. That goes to our next question really well too. So I do want to go back to that, Denise. Come on, I'll give you a second on that. Why are you at the rating that you are?
I think Teddy hit it right on the nail. I mean, when we first started with this market, our buyers were just at a complete shock. You couldn't negotiate, when it came to prices and closing costs and things like that. And I think buyers are just now more prepared or understanding that the market is just a market where you really have to pass and go quickly and make decisions based on what you see quickly and whatnot. And I think buyers are just better prepared, and we're preparing them better for a faster market right now.
Yeah, because I think buyers have to know that, I did an interview with New York Times last week and they were talking about, some fair housing issues. And they're like, how do you really know this happens? I'm like, because realtors are the portal to all things buyers and sellers. And if we're doing our job well, then they'll know. And, and a few weeks ago, we saw some things go around and, that show, prices going for 130, 140,000 over asking price. And it shocks the market. And one of the messages we have to have as realtors is the true statistics and data behind everything. Okay. And so when we can start helping the buyer understand that, yes, you're entering a very interesting marketplace, there's still homes to be bought. What are some things that you can do to reduce the stress? What are some scripts and dialogues, Teddy, that you're using right now with buyers to help reduce that stress for them?
As I mentioned, I do believe coaching is one of our key roles, and the apps can't do that. And that is really a part of our value we need to keep in mind. And so, one of the things I love about what we do is a lot of therapy. If you haven't had it for yourself, you certainly get to give plenty of it. And so I think a lot of that starts in understanding your buyer's learning and listening style, and making sure that if they are the person that, of course, is that analyzer, that you're providing statistics to show them that not everything is going over list price. But, in a simple narrative, I do tell people, of course, it is a competitive market. It's not bad. It's not good. It's just what it is. Do I believe there's a bubble? No, not necessarily. But as I mentioned, don't fall in love with these homes and pace ourselves and give ourselves more time and patience in which to win the home, and know that just like before, no home is perfect. And so it's really about what you can tolerate and stand. And some of the narrative I'm using is pick a number that you're willing to go to bed at night losing the home, and be at peace with that. You've got to pick a walk-away number. Everybody has to have boundaries, right? And it works the same way in this aspect. And so just have one, be good with that, help them be comfortable with that. And then I find that they're a lot less attached and they take it a lot less personally.
Great advice. And Denise, I'm coming to you next, but one of the things that you really got in my mind, Jay, we all have different ways of how we say things. And I always look at my buyers and say, if I were to call you in 30 days and I told you that this home closed for this price, what number would make you sick? And that's their high number. at that point. It's your sickening number. If it's listed for 520 and you would have paid 560, but if I told you 561, you're like, I wouldn't pay 561 for that. If you've been to, I go to cattle auctions, you see that person bid on cattle like this, and then boy, when it gets the number, they're done. And you've got to have that mentality here. So great advice. Denise, how do you see us reducing stress for the buyers today?
If you're familiar, and I think most of us are, with the DISC profile, we used to just really analyze that and try to learn our buyers. I think almost everybody now is a C, and we have to share information with them, and we have to share more information than we may have shared in past markets. And so I try to do that. And then also just coach them through the struggles and support. It's a lot of, like Teddy said, it's a lot of support and counseling through it. I like your sentence there, Brian. I think I'm going to use that. What number are you?
Yeah.
What's your number? What's your number? Because we don't know where it's going to close. And I know you don't want to, quote unquote, overpay. That's what I hear a lot. But how are you going to feel when we find out how it closed? So that's what I'm doing.
Cool. So Teddy, after Kamal answers, I want you to talk a little about the DISC assessment, because I know you're really into that too. So I want you to spend 30 seconds or so on there about how you're looking at the DISC assessment on that too. Okay. Kamal, how about you? What are you doing to reduce stress for buyers?
I say data is beautiful. I think it's really important to show people data, because statistics really show the trend of how buyers make decisions, and it helps my buyers understand the kind of competitiveness that they'll see entering this market. Working with buyers, I'll tell you that in this market, those who may have the availability of cash or whatnot might have some advantages, but I work with buyers from all price points, and knowing what their highest number is or what their capabilities are allows me to help them navigate what's best for them. Right now, resale is probably one of the most competitive markets, and new construction is still an option for first-time home buyers. It's not as competitive, and you can still get into it if you can find a lot that's available. So strategizing with them, sitting down, showing them the data, I think it really helps a lot. And it's not knowing that it's not coming out of thin air or just a discussion topic. Showing them that this is the data and these are where the trends are going helps them make better decisions.
Go to Teddy on that DISC. Kamal, you gave me a brain synapse here. This week I was looking, and it's hard to find anything below 300,000 here in Nashville. And I'm not trying to pull out specific developments, but in Old Hickory there were some developments that in February were $210,000. They have closed at 210 for the townhomes. Right now they're selling for 259 to 269. If a buyer had purchased that in February, now we're sitting here in May, they could resell at $40,000 to $50,000 profit. So this new construction piece, we always have to remind the buyer, it may not be the perfect place, but anyone in this marketplace right now that's renting, that has the capabilities not to rent, they're making dire errors right now by renting. So we continuously have to remind a buyer to go into that space. So Teddy, on that DISC assessment piece, what were some things that you have thought about with this buyer personality piece? You did mention earlier about analytical buyers. Is there anything else you would add to that piece for us?
Just remembering that we're all human, and it's certainly one of the vulnerable and stressful times of their life, right? You just have to be, we've done this, whether it's for 6 months or 6 years or 60 years. I mean, it becomes a little bit of second hat, although even we have been put into a tap dance in trying to navigate some of this competitive market at this level. But just really putting ourselves back into the stress of this. And even if they've bought and sold before, recognizing that, as Denise said, a lot of people are a C. The DISC is the dominant, influential, steady, and compliant. And that C being compliant, cautious, careful, conscientious. And so just helping us being, again, coaching them in that role of, it's okay to be nervous and stressed and disappointed, but recognize it's a lot about mindset. Of course, that goes with how we run our businesses and most things in life. We have choice, right? And we really have to control this more than we can control any of that. The market's just what it is. We get to decide what game we want to play and how we're going to play it. You're muted, Brian. Come on back to us, friend.
Sorry. And that's
Okay.
exactly, I get one. I use my one, Teddy. After
That's
that,
okay. That's okay.
you know how it is. When we look at this whole piece of this transition into seller piece, you hit on some pieces I wanted to talk about, Teddy, on this, because we are the advisor for consumers. We got so caught up in this DIY network mentality, this HGTV home mentality. Yes, that is on mass media. You're seeing Netflix everywhere. But remember, buyers, most buyers, the vast majority of your buyers, they expect your guidance. And we're in a mentality sometimes as realtors where we lose our confidence, where someone says, well, they know all this from other places. No, they don't. They need your guidance. And so, one of the stressors I was writing down when Kamal was talking was, one, keeping buyers, because where's the most stress going on? Shake your head if you agree with me. Is coming soons, are they stressful in that coming soon market? Okay. Are the first 3 to 5 days on market stressful for a buyer? Okay, there's a stressor. Are there homes on this marketplace that have been on the market for over 8 days? Yes, there are. Okay, so if we're looking at reducing stress for buyers, and again, advising someone when they say, I don't have cash, I can't waive my appraisal, I don't have money to bring beyond the appraisal, I'm not going to waive inspection, or I'm not going to do pass-fail inspection. If they're not going to become a 10-level buyer, then they have to be guided through to say, where can you look for inventory? Because when we look at the 7-day process, home hits the market on Tuesday, first showings on Friday. So we're Tuesday, Wednesday, Thursday, Friday. Okay, everybody's looking Saturday and Sunday, offers due by Monday at 1 p.m. We see it all the time, y'all. That first 7 days is stress city. And if they're wanting to see that house on Saturdays and Sundays, those multiple offers have come in on that Friday. And then now they're sitting here at 2030. So how do you reduce the stress? Have them give you permission to say, I want to see homes that are not coming soon and homes that have been on the market for over 8 days. And again, they're going to be able to, I always say, if you're going to sleep on it, you're not going to sleep in it. They're going to be able to sleep on their decision in some of these cases. So that's a script that we can really be using for our buyers today. Now let's switch over to sellers. And let's go back to that on a scale of 1 to 10 question. And Teddy, I'm going to come to you, Kamal, Denise. Scale of 1 to 10, what stress level are you seeing for your sellers right now, Teddy?
I'm going to say a 5 to 6. It depends. Some of them, I try to increase their stress level a little bit, because I feel that they have an additional duty and responsibility in a market like this, right? Just because people are throwing money at you, there's a responsibility to that, and there's a professionalism that is could easily be lost, and we've seen it in some situations. So I'm actually increasing my seller stress level a little bit from what I think they think, because they can get almost any price for it, and just making sure they're putting forth a great product, they're handing over possession in a great manner, and stewarding that well. So I'm going to give you a number of 6 or 7. 6.
And see, that's spectacular, because so many times with sellers, we see all the time in social media placing, I sold this house in 1 hour. What message are you sending to the sellers at that point? You don't need us because it's so easy to sell a house.
That's right.
And I'm telling you right now, anybody can do the 3 Ps, which is price it, put a sign on the market, and pray. Those are so easy to do. Your job becomes your job from the negotiation to that closing table. Because right now getting it sold is easy. So I love the point you made, Teddy, about we've got to show them that while it may seem like a 5 stress-free sell right now, you have got to show them that it can be a 10. Kamal, from your opinion, what are you seeing the stress level of your sellers right now?
I would say probably a 6, like Teddy says. I think even higher, probably my sellers are buyers as well, entering that buyer market. But I think for sellers, my advice to them is always in coaching them that the market is hot and it is to their advantage in some way, but it's also important and responsible to price their homes correctly based on, sold data and whatnot, and not to, put something above the value of their home, which could come at a disadvantage to them, and which will hurt them. So, and if they're not being coached by someone who has been in the business who's been trained to understand that what's important and how the appraisal will come back to them and haunt them or hurt them, they may think that this market is just an easy sell, but it isn't. It's very difficult and complex, and it's really important that they work with us for that.
Cool. So Denise, from a newer agent point of view, a new realtor here, where are you seeing the stress for sellers?
Well, my sellers just recently have also been buyers in this market. And so some of their stress has been, I don't want to sell my house because I don't have a place to go yet. And what is that going to look like? And but then also coming up with a plan for them. But it's stressful for them to have 20 people coming through there on the same day. And the number of showings, the number of calls, the number of contacts, the number of questions, it's heavy. And I think that's where the stress is coming from. I didn't give you a number, I think 5.
Oh, it's fine.
I'd like to add, Brian, if I may, to your point, Denise. I think that's great, but I think there's something with that we have to, that I'm sensitive to, and I'm sure everyone is hearing this, but is the guaranteed offer and the ease of the experience being like they're being promised to reduce the seller stress by taking a guaranteed offer and not bothering with these people coming through their home. I'm like, let me bother you, please. Go take a staycation, and I'm going to get you so much more money if you're willing to go through this burden of the showing. That's not the burden, right, friends? And I think we have to do a better job of coaching and educating these sellers that I don't earn my keep when I put your home in MLS. Just like I tell my buyers, don't you love those buyers that say, my realtor didn't even find the house? And I'm like, well, this one might be the same way because it's a team sport, and that's really not the hard work and heavy lifting I do. So strategy, sort of like an attorney, you're sitting in front of one, you're trying to solve a problem and you want the best. And so it's strategy and coaching and understanding and those tools, I think, that we really need to ever more so be demonstrating and sharing, rather than, like Brian said, I sold this in an hour, because it does nothing but minimize what people believe we do. Thanks for letting me share, Brian.
Oh, no, yeah. I think it's great. Go ahead, Denise. Sorry.
I was just going to add, too, that it's important for us to storytell, because there's more than one story to be told. Yes, they're going for over asking, but there's other stories to be told. And I think that's a big part of our job. They need to hear it all.
Well, and we have a question from the audience who's about this very topic, is this greediness aspect. So we have a question that says, can we touch a little bit on dealing with the greediness we're seeing with sellers these days and managing that as a listing agent? Okay. So Teddy, I see you want to take this one, so take it away.
Well, I've just been digging in because I've been dealing with a few transactions lately, and we've done a lot of rework on some language with some attorneys and things like that. And some of it involved the seller greed, if you will. And many people, let's start being cautious. We're not using all homes are selling in 2 minutes over list price. It is not all, and we have to be careful and intentional with that language. But we show up 30 days later. We did a walkthrough pre-closing, but of course the sellers are still in it and plan to be for a period of time after. We show up 30 days after. The yard's not mowed. The trash is heaping over, and the beds are full of weeds. There's not keys to all exterior doors. I mean, and this was, again, we paid over list price. It was competitive. We were dutiful. We gave the free occupancy, all the things. But what I want these sellers to also do, and this should be a norm, is get a security deposit from these sellers, hold back some of their proceeds, a minimum of 1% of the price, in my opinion. This is very off script, if you will, but it's just, I think we have to coach them better about, look, there's responsibility and stewardship to this, and turn over a great product. Broom swept might be one thing, but folks, get this trash out and hold a deposit that helps protect these buyers that, at the very least, after they've been through hell and walked on coals, they're walking into a pleasurable experience because they really feel like they lost the amazing race, but yet they won the house. And so, it's more than, flowers and champagne at closing. I really think they really prefer more just, keys clearly labeled on the counter, the trash not overheaping. And, it seems ridiculous that we can ask the sellers to do these things, but I'm really hoping that in this market, we're going to course correct some things and apathies that may have existed before from buyer sides and seller sides. So this is the chance where, especially on listing, make sure you're getting some of this language and documentation really clear, right? I think using pass-fail inspection, that's confusing people. There is no such real thing as that. Escalation clauses and having proper forms for that, appraisal shortages, things like that. So,
okay. Denise, Kamal, anything you want to add to this question again we have about the seller greediness that we have a perception of out there?
Teddy, just about the turnover for seller to buyers. I always tell my sellers, how do they like to be treated if they were buying a home? And I have them tell me exactly how they would like the home to be presented to them, and say, if that's how you love it, expect that when your buyer purchases your home. And it just kind of lays it out all on them. So, having a trash overflow, keys not, present at closing and things like that, kind of helps them understand and puts them in the buyer's shoes. So I totally agree with everything you said.
Cool. Denise?
And I think I just add that this is where we show our value as the listing agent and as the buyer's agent. So maybe you gave top dollar or you received top dollar for your property, but that experience doesn't end there. And that's where we have to have those hard conversations, whether you're the buyer's agent, listing agent, to make sure that it ends the way that it should for all parties.
Which involves communication, right? These listing agents, me included, right? We're under demand. We're getting all these offers. It's not all roses over here either, but there are tools, right? Your showing centers has communication tools. There's you need help, go get assistance. There's virtual assistants, there's local, and all those things. So don't let a busy market deplete your value and resource to be in communication with the other agent in closings and deadlines, please.
Yeah. And some of this greediness that we, again, have a perception of, or we're hearing stories about, comes down to pricing. And I go back to the statement I made earlier that with buyers, you have to be the guide, and with sellers, you have to be the guide. And in my opinion right now, this is not based on any kind of national model. I'm seeing 3 pricing strategies in place. And those 3 pricing strategies are: 1, the strategic underprice, where someone says, hey, seller, we're going to try to get you multiple offers on this. I know your home really should list at $425, but we're going to list it at $399 so we can blow the market up. Okay, so that's strategy number 1. Strategy number 2 is the on the nose marketing, which is looking at past appreciations and what happened in 2006 versus 2021 in the same area to see what the appreciation looks like. Then we have in that same right on the nose pricing, we have our comparative marketing, we have our compelling marketing, we have our all these different pricing models that say, okay, we believe the on the nose price needs to be $425. That's going to be the perfect price where you can appraise this home, where the appreciation's there. We see that as a strategy. So that's number 2. Number 3 is the pre-escalation strategy, where they're saying, hey, it should be 425, but probably an escalation, it's going to go for a lot higher. So let's go ahead and take the escalation. Okay. And in each 3 of these strategies, there are dangers and pitfalls. In the first one, you have the pitfall of again, we don't have crystal ball here. And if you're saying, I believe that you're going to get multiple offers, you price it at $399, knowing they should get $425. Now you've got a code of ethics issue where you have underpriced a home and you've given bad advice and only get $410 for it, as opposed to taking 30 days on the market and getting their full money for it. The on the nose pricing, I don't see a lot of pitfalls with that. That's one of the best ways to do it. But in this pre-escalation piece, if your seller wants to take that escalation, meaning they're going to think through the escalation clause saying, okay, we would like for it to go for $450. If they're going to go to that level and it's still within the rate that a computer model or a personal model will say that you can go, then you have to be able to advise that seller to say, when we're at a premium price, this 7 days on market's not going to happen. 14 days are going to happen. You're probably going to be on the market for 30 to 60 days. And you have to give them the tools to say, because they're going to be yelling at you at that point when the home hasn't sold in the first weekend on the market. It's still okay to price a home in a place that's not going to sell in the first 7 days. Okay, our job is to help represent our sellers. Now, you may see that as greed, but it's also got to be advisory. And if you're not in the economic, because again, we're talking about nationomics and the economics of this all, we've got a seller economics here. And we're the steward of their money. We're their financial advisors on some level. Okay, so there is this stewardship piece of it. Okay, so just a little piece of that as far as pricing. What pricing are you seeing out there, Denise, right now? When you're looking at sellers pricing their homes, do any of the models that I mentioned resonate with you? Or are you seeing other things out there in pricing that's happening?
I'm seeing a lot of what you talked about, and more so, I think, even the underpricing to create several offers, a multiple offer situation. I myself try to coach towards the second option, just because we have the market that's going to work for our sellers. We have the low interest rates. We have buyers. They're ready to buy. And the market really should, in most instances, work for them in order to get the most out of their house if we price it in that second category. And we'll celebrate when we get over asking. The third one that you talked about, I'm seeing that that's more in certain areas. I think I'm seeing it in certain areas more so than others. So where there's less inventory, East Nashville, Inglewood, Williamson County. We'll get into those different areas.
Come on. When we're looking at the pricing, when I look at, like this idea of the strategic underprice, the right on the nose or overpricing it, are you seeing other models out there? What are you seing pricing wise?
To be honest with you, Brian, I'm not. I mean, I do see a lot of underpricing, and that really does create a buzz with buyers. I mean, they're getting 20, 30 offers from, and that's the exception, not the rule. I mean, but what I do and what I strategize with my sellers is working with the option 2, where, we work with based on comps and like Denise said, we celebrate if we get something above it, but I can assure my sellers that, their home is marketed correctly based on what the values show, what the data says it would sell for. And to Teddy's, rule, and I think someone mentioned a question in the comments that, legal fallout, things like that. I'm trying to protect my sellers. I don't, these appraisal gaps, which is a new phenomenon, or it sounds like it's a new phenomenon I'm seeing in this market. Where buyers are saying that they'll be willing to pay $20,000, $30,000 or whatnot if their appraisals don't come in. That's a really dangerous game to play. And so I tell my sellers to market their home and put it on the market based on what the comps will say it'll sell for. And so long as they understand what they will get for their bottom line, and assure them that they will at least get this, and then whatever comes above that is something to celebrate, like he said.
All right, thanks, Kamal. And Ted, I've taken some of my favorite pricing classes from you in the past. So what is your philosophy on this?
Price it right. And what is right? And so, we have those consultations with sellers as to, what is the right price? And, we look at comps and do those things. And then at the end of the day, you pick your gut feel. I do pay attention to pricing categories. Always bugs me when people price something at $329,900. Most people's drop downs that they're searching are in $25,000 increments. I'm picky about that. $300, $325, $350. You may miss a huge audience being $5,000 over a threshold. Look at Kamal's like, really? Yes, $355. I love the $354.9. So I'm picky about those things, and I try to coach my sellers. Sometimes you're a tweener, but in between those brackets. But I've got to be thinking, what's the buyer doing to search, and that the agent may not always be searching a certain percentage over. And we need to be mindful that, if buyers can spend up to $500, they need to be maybe possibly looking at property up to $450 in the areas that may be a lot of the inventory going well over. Again, just to kind of prepare them so they're not disappointed. But price it right. I think pricing it right, let the market escalate and handle that piece of the equation. And then, of course, if you've got appraisal gaps, I'm really encouraging and have drafted new language. I'm happy to share it on the Middle Tennessee Forum of the appraisal shortage and making sure that the buyer can cover that gap and show proof of funds, get proof of funds for the gap, in addition to their deposit. And my next hurdle and desire is that people start putting this promised money in escrow, right? Because why shouldn't it be earmarked for this transaction so that if life happens, we're not derailed in a sale because the money wasn't put into a holding spot for another class.
No, great info. And, it also goes back to when we're talking about buyers and sellers here, You mentioned the Middle Tennessee Forum, Teddy. This is, many of us are in that group, and there's always graphics shared. And one of the graphics that I've been working on recently is this whole idea of the inventory forecast. Okay, we know that based off of 2020's numbers and 2021's numbers so far, on average, we have roughly 328 homes per week hit the market in Davidson County. Okay, so your job as a economist, as a nationomicist, or however you want to say it, is to tell your buyers and sellers, what does that trend line look like? If average is 325 inventory pieces and we're falling below the market at that point, then you got to be able to tell your buyers, just like if we're looking for rain on Saturday, come out with an umbrella. If we see that the stock the week before has plummeted to 225 units, for a buyer, that's going to be tough to enter that marketplace. Right now, since roughly March, the fourth week of February, we have been having inventory levels come on the market at below our average. Okay, so we're not having enough supply to hit the demand of this marketplace. So as you're working with those buyers, you have to be able to tell them, hey, inventory looks like this. If you're going out this week, you're going to see a very competitive market. You have to tell sellers on the other side too, though, to say, hey, only 220 units hit the market last week, and you're in a very hot zip code. We know some zip codes, for example, Denise mentioned Inglewood, 37216 as a hot zip code. If no homes were to list from this day forward in Inglewood, there are 15 days of stock available, 15 days. Okay. So when people understand that is the grounds they're entering, and then they understand the forecast, it can help you either focus them somewhere else or help them understand where in the price point area they're going to have to get competitive. So watch the inventory levels, watch the supply and demand. That will help you be an economist for your buyer and help show your value as a realtor here also. Okay, so when we go into this area of Davidson County, okay, do you realize that in Davidson County, we've mentioned this a little bit on this, but 63% of all homes are selling at or below list price. Okay, so at the closing table, 63% are still closing at or below list price. Okay, how do we shift the conversation to make sure that buyers don't give up in this marketplace, especially when we have buyers who've only been in this market for 2 weeks and they give up because, again, they're in that coming soon or new to the market area? How do we start shifting that conversation, Denise, to help buyers stay in the marketplace and have confidence in this Nashville marketplace instead of going to Louisville or Chattanooga in a relocation?
So first, just talking about the market and about how when I first entered, and I haven't even been a realtor that long, we can wait until the weekend to go and see homes. And so we talk about our strategy as far as going to see homes. And then we talk about how we may not find it in 30 days. And so we have to really talk about what their living situation is and how much time they have. Because with the lower numbers of inventory, it may take us a longer time. And so if they know that ahead of time, I think that relieves some of the stress for them. And then just looking at in other areas, expanding the search. So if you like Hermitage, can we do Old Hickory? Let's take a look and see if that's going to work for you. And that's really what I've had to resort to. And then they start to alter their individual situations. Maybe I can stay in my apartment for 1 more month or 2 more months beyond when that lease expires, so that I can find the right house and give it enough time that and it just eases up the stress and they find something. So we find something.
Denise, do you remember that when they had the colognes out called Designer Imposters? Do you remember that? So it's
I do.
If you love polo, you'll love a horse trick. It's kind of like how we've got to have designer imposters for our buyers today. You want this walkability and this village feel of East Nashville, but you don't have the $600,000 to spend. You can find right now in Old Hickory or Madison or Goodlettsville something that's in the the fours that will have some walkability to it, that will have some shops. So we've got to be, again, that concierge. And we've always been that mentality, Teddy, of, I only work in this area. And you can't be that anymore in this marketplace. So, Teddy, what are some of the things that you're doing to help buyers not give up right now in this marketplace?
Well, tell them we're all not going to live on Dickerson Pike. If you want to live in Cleveland Park, it's just you're likely going to be in a competitive space. And so, as you said, just helping them explore other areas, right? I used to be a big proponent when people were coming here. Everyone would go to 12 South and get the cupcake, and they go to the Gulch and get the wing photo. And it's like, there's other wings. And like even these Airbnbs were painting the murals in the houses, which I just think is adapting, right? Like, why do we have to compete for the same space? And so, as you said, it's education and understanding. We need to educate ourselves about alternative markets. Springfield is amazing. That's a charming, adorable downtown. I just put an incredible Victorian under contract there. And just unbelievable. And I've seen these beautiful vignettes that agents are doing on their TikToks and their story feeds and things, where it's helping people understand and believe there's a lot more to Middle Tennessee than some of the areas that they've heard or seen on TV. And, of course, with people's ability to work and play remotely much more, that maybe that primetime location that they thought was their must-have isn't.
Great. Jamal?
I'd like to add that a lot of buyers are unaware, especially first-time home buyers, are unaware of places like Donaldson or Madison and things like that. They're just so hooked up on these names, East Nashville, Inglewood, 12 South, and they think that's all there is to Nashville. But you go, Madison is an incredible area, and I have found huge, widely success in places like Madison. 15 minutes to downtown. Can you get better than that in some areas? Off Ellington Parkway, due west. And so it's our duty to educate these buyers that there are other places in Nashville that are close to downtown, that are close to the urban core of Nashville, and they're incredible areas. You get great land, great homes, good value, and just a great opportunity to see increase in equity and everything. So I think that's something that we have to always educate buyers that there are other parts of Nashville that are just as incredible as these other places, and they will see the same type of growth as Nashville will expand, and we'll see that very soon.
And again, back to scripts that you can use with your buyers today. You always use this term, the edge investment, okay? Because every neighborhood has an edge. When we look at Richland and Cherokee Park, that was a core. People wanted to be there. When they couldn't price in there, where did they go, Teddy? They went to Sylvan Park at that point. And then when Sylvan Park started outpricing, they went to Sylvan Heights, edge of edge of edge. And then they went to the Nations. Right. And so now what becomes, and when we're explaining them this history to say in 1998, Richland, Cherokee Park, Sylvan Park, and now you're getting Sylvan Park, you're looking at $1 million entry price point. Yet you can now go over to the Nations and your entry price point is going to be in the 5s and 6s at that point. For something similar that's in Sylvan Park. Then what becomes the edge there? Charlotte Park on this side. And when you're showing there in Charlotte Park, you can still show property over there for $300,000 to $400,000, and they can cross Bradley Parkway and be in the Nations there with all the coffee shops, with everything there, Frothy Monkey, within 3 minutes. So when we educate people on this idea of the edge, it helps the buyer understand the Nashville economy and how that we continue to go beyond these areas here. So one of the other things that we've heard is this whole idea of the outlier. And Kevin Wilson, who's vice president of Greater Nashville Realtors, he had an outlier closing the other day in East Nashville. It's been all over the news, that was priced in the 7s and went in the 9s. How do we discuss, Teddy, these outliers with our consumers today when they hear and again, I'm not saying that Kevin did anything wrong. It just happened to be the way that the market fell out. He had no clue the house was going to do that. How do you describe those outliers to your buyers today, Teddy?
Well, I certainly don't do it by categorizing the California buyer. I'm so tired of hearing the California buyer, right? And we get the question, where do people get all this money? And it's like, that's really not my business. But I assume a lot of people, there's a lot of wealth or extra cash in the marketplace. So many people save money, by not eating out and traveling. And so they've got this unfound wealth that they're using or leveraging to buy things. And so I explain it, of course, like many things, is that there's always going to be people that will pay a premium for based on their needs. And so it's not necessarily that it's not worth it. It was worth it to them. And just like we discussed in your search, Mr. and Mrs. Buyer, that you've got to have your boundaries with it. And so with limited inventory, if it's a must that they want to be in that and they just fell in love and that's a reasonable value, you're going to see that, but don't let that discourage you that you have to play in that same game or competitive space.
Okay, so thank you for hitting on the California piece. Kamal, when you think about the Nashville market as a whole, when do you think it will become more manageable for a buyer and a seller? What do you see as the time frame on that, just in your own personal narrative experience?
Ooh, I don't have a time frame for that, to be honest with you. It's unpredictable right now, to be honest with you. I really wish I could put a timetable on that, but there's just too many variable factors right now to make a timetable. I would say, by 2022, hopefully we'll see some change, even in the new construction market. Hopefully lumber goes down, things like that. I think will ease inventory and whatnot, and put some things more back in the market. Hard to say, Brian.
Well, and I would say that I think tomorrow's session is with Dr. Lawrence Yoon and Dr. Jessica Lautz. And if we can't answer that question, you need to be listening tomorrow to NASHONOMICS. This whole series is going to answer that question because we don't know. But those are the economic indicators, and that's why we're having this series. So you can go to your buyers and sellers and say, hey, according to people a lot smarter than me, this is what the market's looking like. Okay. So Denise, for you, I know you have no crystal ball. I'm going to ask all of you, but I want to start with Denise. And the answer is, I don't know. I want to hear it because you're my experts today. I know we have no crystal ball. And for us to tell a buyer, this home is going to appreciate like crazy. You buy in Madison, you're going to appreciate 25%. And that's dangerous. Your broker doesn't want you to do that. Trek doesn't want you to do that. Code of ethics doesn't want you to do that. But we're in a realtor only space at this point. And I want to talk about this crystal ball. And if we look at 2026 and we're looking at the urban core of Nashville inside of Briley Parkway, what do you think price wise? What does the urban core look like in 2026, in your opinion, Denise?
So I don't have a crystal ball, and if this is being recorded, you cannot hold me accountable. But I think that our buyers and sellers, it'll be a more stabilized market. And I know we still have people moving into the market, but I just think the pandemic had more of effect than we can really put our fingers on right now. And I think coming out of that is really going to stabilize it some. So I think in 2026, our buyers that are buying today, and this is the conversation that I'd like to have with them, is that they're going to be enjoying their investment, and they're going to be enjoying the profits from that investment. That's the conversation I want to have with my buyers today, is that, do you think houses are going to be more expensive in a year? Can you answer that? And if you do, then we need to buy. And I think in 2026, they're going to be realizing the benefits from what they did today.
Okay, in 2 minutes, Anna's joined us for questions from the audience, but 45 seconds or less. Kamal, same question. Urban core 2026, what does it look like?
Booming and busy. I mean, the urban core is going to be, just looking at the amount of businesses and buildings being built right now and will continue to rise. I mean, based on statistics, based on just data, following the trend, vaccinations, things going back to normal. Nashville has a really strong economy and strong, outset for an incredible growth. And that's how I see it.
Okay. Teddy.
Crystal ball friends, we've been here. We have the data and the statistics. While history is no proof of the future, right? Even I don't have to have done this for 20 years to understand potentially of where we've gone. I've been through, short sales and market crashes. Bobby and Noreen, my mother sold real estate at 18% interest, all the things. I mean, I just think that we have historically experienced a great level of appreciation. And I remind people that, this investment is part of your wealth plan, and I want to be a part of that with you. And it's serving several purposes. One, it's a roof over your head, right? It's serving simple functions. So we've got that, but then it's lifestyle, as you said, Denise, very important. And then appreciation. You want a number in 2026, 30 to 40%. I think our prices will be up from today. And I think a minimum. Now, I think they could go higher than that, But I think that we may see some roller coaster effect where it'll level off a bit. Maybe lumber prices come down, but I don't love the new normal. It's just what is normal. It's just what it is. And then, of course, tax deduction. You've got to remind these people about the tax deduction that our lobbyists fight so hard to protect, and how important it is as a part of our economic engine of America is the tax deduction of home ownership.
Great. I'll answer that question before Anna takes it from here and does our audience questions. Agree with Ted. Urban core, I see areas that have land heavily in them in the urban core. I see density going up like crazy. I expect anything inside of Briley Parkway, including places like Parkview, north of Nashville, it's going to be just shy of $1 million in the next 5 to 7 years to be inside this urban core. I think it's going to be tough to get inside. You're going to be able to see condos and certain smaller properties at below that $500,000 mark. But I think this urban core is going to be very tough to get in if you want to be, as traffic again begins to grow outside that Briley Parkway area. I believe that we have to look at overall saying to our buyers that by now, if people say it's a bubble, we're not in a bubble. We're in a correction. Our prices have always been very low in Davidson County, and we're in a market adjustment, a market correction up. I just don't see a bubble blowing there. So that's my forecast. Again, if you're videotaping this and want to watch it back in 5 to 7 years, don't hold with Denise and I to our comments. All right, Anna, take it away.
Oh, you guys did an amazing job. I've learned so much just listening to this. So thank you so much. We do actually have a few questions from the audience. So I'll start with this one. It's two-part, and it's really maybe just looking more for comments than a question specifically. So with the convergence of buyers moving from more high property tax metropolitan areas to Nashville, are you all finding that locals are being priced out? And then also with this level of growth, are there any concerns about long-term homeowners here in the metropolitan area being quote unquote taxed out of their homes through that gentrification?
Teddy?
Oh, really? You're going to put me on the spot with that one? I thought that was for you, Brian.
Well, I'm happy to answer it.
Go ahead. I'd love to hear your answer, please.
Well, absolutely. This is part of affordable housing. This is a national issue that we have, and we always have to have homes for our workforce housing, for our legacy homes. We as realtors have a responsibility, and just because someone can sell their home for $200,000-300,000 more, $1 million more than what they paid for it, back in 1986, we have to keep the fabric of our communities rich. We have to keep the fabrics of our communities diverse. And this all goes down to generational wealth also. We know that real estate builds generational wealth. And how do we help our locals who cannot afford the new tax rates? We have to help our seniors understand about tax freezes. You have to get that word out there to the seniors. If they cannot afford, they pay $20,000 for their house in Bordeaux, and they cannot afford the taxes now, yet they can sell it for $700,000. That's part of their generational wealth. We have a stewardship in real estate as realtors today to guard that. So sometimes it's not bad. Yes, you'll make money out to the bottom line, but are you destroying someone's generational wealth? To me, Denise, to me, this is a huge issue. Would you agree with that?
I would agree with that. And I would say that I just had a conversation recently with my stylist who is helping her mother remodel her home in North Nashville. And they're having conversations around supporting her in paying her taxes because it will be their house someday. Freezing it, of course, but then also supporting her financially because the amount that they support her now will be tenfold in the wealth that she's able to generate and then pass on to her family. Just had that conversation recently.
So yeah, and to answer the question, I think one of the big answers is we got a job to make sure people stay in their homes when they should stay in their homes. It's not always about the bottom line.
Great. I'll give a plug for being a realtor member of our association. That's a part of really being able to engage as an association and have that power to really engage on the community level, on our political level, and be a part of those important conversations. And so, that's a big part of being a realtor. So I'm plugging in on that one, just a plug for our association because we do a good job with that. And then the other question is, one is any concerns about legal fallout in terms of these pass-fail? I know Ted said they don't exist. These pass-fail inspections, these, is there concerns about these quick closes and if there was enough time for due diligence and that kind of thing? Is that going to come possibly bite some people in the fanny in the coming years or months?
Yes, of course it is. Of course it is. And I think that, again, of our job and value, we've got to get out of this transactional space and really help educate the marketplace that it's not about the billboards and TV ads, friends. I mean, we, in some ways, our colleagues are looking at Uberizing the business. And this just becomes more responsibility that I try to educate my buyers and sellers about. My job is to help protect you against the what ifs. It's the 5% oh no's, right? Most of the time the handshake deal in the one-page contract could go well, but this is a big transaction, and it's not like a Facebook marketplace transaction, and so I have to be mindful and ahead of certain clauses and conditions and contingencies and problems that exist. And even if I only do 5 transactions a year, it's never been easier to be educated about the problems and pitfalls of our industry through some of these forums and educational platforms whereby your job is to help just protect against the what ifs. And so I just can't speak it enough of how important it is as we pursue these things with pass fail or as is inspections, appraisals. There's clauses, conditions, and things for this. And while the seller may not be willing or wanting to take it, we have to prepare them as listing agents that it's reasonable and responsible that the sellers be willing to take a post-close occupancy security deposit. Just because somebody doesn't ask for it and that maybe it puts them at risk, it helps protect everybody as to what that means. Give these people a home warranty when they're buying an as-is home. It's not all protection, but it's an extra layer of protection that maybe they deserve, right? Offer those things back. I'm not in the warranty sales. I'm just saying I think we need to look at some of these tools again as to help bring some of the peace, comfort, and protection that our job is so important to offer.
And that shouldn't happen at contract time. What's happening is these buyers only have an hour to make up their mind and they know nothing about the contract. That pre-counseling happens. No person should go out in your car or virtually in your showing space without having at least an hour of counseling to go through this is your option. This is the downfall of each of those options. Here's the pros and the cons. That counseling needs to happen the second they come into your lead source. Last question, Anna. I think we got 2 minutes left.
All right. This one's a pretty easy one. Has anybody had any success with ribbon in terms of winning in multiple offer situations? No. All right. So I think I've got one other quick one. I think Kamal had touched on maybe existing sales being a little hotter than new construction. Do you know why that is, or do you have any thoughts on that?
I mean, they're both equally hot. I mean, the market is hot everywhere you go. I think when you're working with builders, I'm able to find them a lot. They're able to make a purchase without having to go under multiple offers and that type of competitiveness. So that's what I'm seeing. On the resale side, sellers are more welcome to multiple offers, and that just creates a little more competitiveness. I think builders are just looking for a certain net, and once they get it, they get it. And so buyers just have a little bit more edge on that if they can find a lot.
All right. Thank you, Kamal. Well, that is going to wrap things up for us today. We're right at 10 o'clock, right on time. Kamal, Teddy, Denise, and Brian, what an amazing, amazing job you did. So thank you for your time and for sharing your insights so generously. Tomorrow, our next session will be with Lawrence Yoon and Dr. Jessica Lotz from NAR, and they will be discussing the impact of the pandemic on real estate and the economic outlook. I'm going to give a plug for Lawrence Yoon. I think he's about the only funny accountant that I know, and it's a pure joy to listen to him, and you will learn a ton at the same time. So we look forward to seeing you all tomorrow, and thank you again for joining us today.
Thanks for having us.
Thank you all. Appreciate it.
Have a great day, everyone.